that China has told its airlines to halt deliveries of new Boeing aircraft as well as parts.
The U.S.-China trade war just got a whole lot worse, and it's hitting America where it hurts the most. China has ordered its airlines to stop buying Boeing planes and banned all purchases of U.S.-made aircraft parts. But that's just the beginning. But here's the real shocker. China is also banning all exports of critical aerospace materials and components, the lifeblood of America's $100 billion aviation industry. This isn't just a trade dispute anymore, it's an economic ambush. And if this continues, we could be looking at a global chain reaction: soaring inflation, disrupted supply chains, grounded aircraft, and massive job losses across multiple industries. This could affect your wallet, your job, and your future. So if you want to stay ahead of the headlines and understand what's really happening, hit that subscribe button and let's break it down. China is the second biggest economy in the world and has always been a major customer for Boeing. Boeing itself has said in its market reports that China will need over 8,800 new airplanes between now and 2042. That's about 20% of all the airplanes expected to be bought in the world during that time. That much business would mean more than $550 billion in revenue. Boeing and its main competitor Airbus have always competed hard for these sales. But now, with China blocking Boeing, Airbus is gaining the upper hand. Boeing is at serious risk of losing this massive market for good. This is not just bad for Boeing, it's dangerous for the United States. Boeing is more than just a company. It's a symbol of American engineering and one of the few large-scale manufacturing businesses still leading in the global market. As of 2023, Boeing was the biggest exporter in the US by dollar value. Its work supports thousands of companies across the country and gives jobs to more than 140,000 people directly. When you add in the suppliers, trucking companies, and factory workers who depend on Boeing, the number of people affected is even higher. So when China stops buying Boeing's airplanes, the impact is huge. It's not just a drop in airplane sales. It also means the loss of long-term contracts, maintenance work, and part sales. Business worth billions of dollars. Investors are already reacting. Boeing's stock price has fallen, and financial experts are warning that Boeing's future profits are at risk. Bank of America recently warned that Boeing's future in the Asian market is now under serious threat. If this continues, it could lead to factory closures, job losses, and the collapse of many small businesses that work with Boeing. So how did things get this bad? The answer lies in China's careful and smart economic strategy. China's decision to stop buying from Boeing is just one part of a bigger plan. After the US government under President Trump raised tariffs on Chinese goods in April 2025, some as high as 145%, China began to fight back. But instead of reacting wildly, China responded with precision. It chose to hit areas where the US still has strength, like aviation and high-tech exports. Boeing became the first target. But China's retaliation is not just about airplanes. In recent weeks, the Chinese government has placed new tariffs on many US products, including farm goods, heavy machinery, and chemicals. These moves are aimed at hurting US workers and businesses, especially in farming and factory-heavy states. Economists at Morgan Stanley now estimate that these Chinese actions could reduce its economic growth by the end of 2025. And there is an even more serious issue that the US now faces: China's control over rare earth minerals. Rare earth minerals are essential to nearly every modern technology, from smartphones and electric vehicles to wind turbines and advanced weapons like fighter jets and missiles. These materials are hard to extract and even harder to refine, and China dominates the global supply chain. It mines about 69% of the world's rare earths and processes over 85%, making it nearly impossible to build any high-tech product without Chinese input. In April 2025, Chinese media began hinting at a rare earth export ban targeting the US. While an official ban hasn't been announced, stricter export rules are already causing major delays. American companies are alarmed. The US military has started quietly stockpiling rare earths, and defense giants like Raytheon and Lockheed Martin are scrambling for alternative suppliers. A full Chinese export ban would trigger a major crisis, crippling industries from consumer electronics to national defense. According to the U.S. Department of Energy, rebuilding a domestic rare earth supply chain could take 5 to 7 years and billions in investment. Far too long in a world already facing inflation and supply shortages. The deeper issue? America simply doesn't have many alternatives. While Australia and Canada have some reserves, they lack the refining capabilities. The U.S. has just one active rare earth mine, Mountain Pass in California, and it still ships most of its materials to China for processing. That's a dangerous vulnerability, and China knows it. And Beijing isn't stopping there. In 2024, it merged several state-owned firms into the China Rare Earth Group, tightening government control over pricing and exports. At the same time, it's locking down global access, securing new mining deals in Africa and Latin America. China's grip on this vital supply chain is only getting stronger. What does this mean for the future? If China keeps cutting off access to materials and markets, the consequences will stretch far beyond Boeing. This is no longer just a trade dispute. It's a strategic wake-up call. It shows how easily a foreign power can target the very foundation of America's industrial and military strength without firing a single shot. For many years, Washington believed America's size, innovation, and influence would shield it from economic retaliation. But now that illusion is crumbling. China has learned how to use its economic power to strike back in ways that cause real damage, without using military force. It's doing this through contracts, trade restrictions, and control over raw materials. If Boeing continues to lose business in Asia, if tech companies can't get rare earths, and if more export markets are closed, the US could find itself in a very dangerous position. Not just weaker economically, but also weaker in technology and defense. So now the question is, did America wait too long to act? Or will this crisis finally force real investment into rebuilding its industrial backbone and securing its critical supply chains? The current US-China trade war is no longer just a standoff between two superpowers. It's becoming a global economic crisis. As tariffs climb and restrictions mount, global supply chains are starting to unravel. Factories face delays, production costs are soaring, and companies worldwide are struggling to make long-term plans. And this disruption isn't limited to the US and China. It's rippling across the entire world. For everyday people, these shocks won't remain invisible for long. Prices for smartphones, laptops, and electric vehicles are likely to climb. Flights could become more expensive as airlines face part shortages. Even basic consumer goods might vanish from shelves or arrive with weeks of delay. What seems like a trade war between nations is already reaching directly into wallets around the world. In fact, major economies like Germany, Japan, and South Korea are already seeing the effects. Their industries, especially cars, electronics, and machinery, depend heavily on global trade. When two of the largest economies in the world start putting up walls, everyone else pays the price. Even developing countries that supply raw materials or components are being squeezed. According to the World Trade Organization, global trade in goods dropped by nearly 1.3% in the first quarter of 2025, the largest drop since the COVID-19 pandemic. Financial markets are showing signs of deep concern. Investors are pulling out of risky assets, and long-term capital is drying up. Banks now warn that if the conflict drags into late 2025, the world could face a downturn even worse than the 2008 financial crisis. The International Monetary Fund has already slashed its global growth forecast to just 2.1%, a dangerously low figure for the modern world economy. For families still recovering from past shocks, another global slowdown could mean layoffs, shrinking retirement funds, and rising costs for everyday necessities. What started as a strategic trade dispute now threatens the financial stability of millions. As a result, countries around the world are rethinking their economic alliances. Nations like India, Brazil, and Vietnam are racing to build new supply chains that bypass both the US and China. But restructuring decades of economic dependence takes time. And the clock is ticking. If this trade war escalates further, it could dismantle the foundations of global cooperation and redraw the map of the world economy. Could this be the dawn of a new kind of Cold War? One fought not with bombs, but with tariffs, technology bans, and economic warfare? Let's take a look at how both sides are trying and failing to fix it. Talks between the US and China have gone from bad to worse. In April 2025, after President Trump announced new tariffs at 145%, China responded with 125% tariffs, followed by strong countermeasures. Since then, high-level meetings have been filled with tension, mistrust, and finger-pointing. No real progress has been made. According to sources from both sides, the atmosphere in these meetings has been cold and stubborn. The Chinese delegation accused the US of acting in bad faith, while US negotiators complained that China refuses to make structural changes to its trade policies. Washington is demanding more access to Chinese markets, the end of subsidies to state-run companies, and stronger protections for intellectual property. But Beijing has shown little interest in giving in. President Trump, for his part, has been using harsh words in public speeches and social media posts. He says the tariffs are working, even as economists and American business leaders beg him to consider a compromise. Inside the White House, some advisors are quietly worried that the president's tough stance may go too far and cause permanent damage to trade relations. Meanwhile, China's President Xi Jinping has remained silent in public, but continues to push forward with policies that reduce the country's reliance on US imports. China is increasing its trade with Asia, Russia, Iran, and countries in Africa and Latin America. It is also ramping up its Made in China 2025 plan, which aims to replace foreign technology with homegrown innovation. Neither side wants to be seen as weak, but both are suffering. American farmers have lost access to the Chinese market. US tech companies are facing growing export controls, and the Chinese manufacturing sector is shrinking under the weight of lost contracts. As things stand now, there are no new meetings scheduled, and both countries are digging in for a long fight. How long can both sides afford to keep pushing without pushing the world into a deeper economic crisis? Fixing the current US-China trade war will not be easy. It requires more than just quick deals or photo op meetings. Both nations will have to make serious changes in how they deal with trade, diplomacy, and global economic responsibility. This is not a battle that can be won through threats or stubborn pride. It demands strategic thinking, long-term planning, and real cooperation. One solution could be to bring in neutral parties like the World Trade Organization or the G20 to help guide the talks and keep both sides focused on common goals. Both the US and China benefit from global trade. Both want their industries to grow, and both want to avoid a crisis that could weaken their economies and shake global confidence. But that can only happen if they recognize that their actions don't just hurt each other, they hurt the entire world. In the short term, confidence-building steps must be taken. The US could consider suspending certain tariffs if China agrees to open its markets further. China, in turn, could slow down its export bans and restart discussions on intellectual property protections. Trust must be rebuilt one step at a time, or nothing will move forward. If this conflict keeps escalating, the fallout could be massive. Factory shutdowns, job losses, and a global economy split in two. We've seen what happens when trade breaks down, during the Great Depression and again in 2020. Will the US and China pull back? Or are we heading into a new Cold War driven by economic weapons? Share your thoughts in the comments, and stay with us as we track this battle that could reshape the world economy.